Hey, everybody, welcome to the Master Passive Income Show. My name's Dustin Heiner, and I'm here to help you get financial independence, quit that JOB, that just over broke job, by investing in real estate so you never ever have to work a job again. Today, we are talking about storage facilities, basically making money off of people storing their property in your facilities. It is so awesome. I mean, you don't have to worry about toilets. You don't have to worry about emergency calls for, somebody that is like, hey, the sink is leaking or whatever it might be. You basically are having a storage facility. And I have a fantastic expert who's been doing this for quite a long time, has lots of properties, and is also helping people in his podcast, the Do More podcast, to invest. And he is going to share with us how we can invest in storage facilities. I have John Farling on the show. Hey, John, thank you so much for being here.
Yeah, thank you. Thanks for having me. Excited to hopefully provide some value here.
Man, this is great. So we have a mutual friend. His name's Seth Williams. He has retipster.com. Super good, awesome dude, good friend of mine. And he was interviewing you. And I saw the interview. I was like, man, this John guy knows what he's talking about with storage units. And knowing that I actually have lots of people that reach out to me wanting to know about storage units at the Real Estate Wealth Builders Conference. We have people saying, oh, I want, can we get some teaching or, an expert come in here about storage units? And then seeing Seth interview, I was like, dude, John knows what he's talking about. Like everything that you were explaining was great. So I wanted to bring you on because I know there's so many people that are going to love hearing about storage units. Now, talk to us a little bit about why storage units over, let's say, not necessarily like it's better than any other asset class, because you've done single family homes, but why do you prefer storage units?
So it's funny. That's a good question. It's funny. I remember when I found storage, I had a few single family rentals, did a flip here and there, and was looking to get out of my 9 to 5 and was looking at everything: small businesses, apartments, car washes. And at the time, I'm like, I maybe could scale with single family rentals, but it's a little bit tougher. You have to buy portfolios. But my single family rentals were almost too passive. I know that sounds crazy, and obviously if I had 100 of them, they wouldn't be that passive. But I realized a couple of years after having single family rentals, they may not fit my personality. Self-storage has real estate investing elements to it, but also business elements as well, which is cool. There's something I can do daily in my storage business that you can't really do with single family rentals. You almost have to keep growing, or you're rehabbing, or whatever. It's basically putting out fires with single family rentals. With storage, I don't have to necessarily acquire more. There are business items that I can do daily that I enjoy. So that was probably the number one thing that drew me into self-storage.
And I love it because your podcast is the Do More podcast, which is super fun because I'm definitely a doer. I love doing things. I love being able to really just build things, as well as the value that I put into something that I get the full benefits of, as opposed to working for somebody else. They get part of your benefit of what you're providing or what you're doing for them. And so I'm definitely a doer. So I resonate with that at all as well. Now, with that, you didn't start probably didn't start investing in single family homes and just, out of college, or maybe you did, but talk to us about before getting into real estate. What were you doing before? What got you into investing in real estate?
Yeah, so I guess I can go way back. My parents, they were in real estate one way or another. They built spec homes kind of on the side. They also had, I think, over the course of time, two rentals, I believe, one duplex, another rental, just because they kind of somewhat fell into them. So, and my dad was actually a real estate agent for a little bit too. So I've always been intrigued with real estate, have always been around it. But then, after college, got a couple outside sales jobs, worked for an electrical contractor. I'm in Ohio and live in Columbus, Ohio, and worked for a local family-owned, not my family, but a family-owned electrical contractor, doing outside sales, wore a bunch of different hats, and saw, I guess, a little bit more of entrepreneurship and enjoyed, I after a little while, I realized, okay, I enjoy entrepreneurship, maybe not in that field, but I do enjoy entrepreneurship. I coached basketball while I was working there as well. And then actually we had our first kid in 2014. And leading up to that, I knew, one, I was quitting basketball. So I'm going to have more free time on my hands. Quitting coaching basketball, going to have more free time on my hands. And then 2, what happened was I started doing, once you have your first kid, all these thoughts run through your head. It's like, okay, can I afford to pay for college for them? What's that look like? And then it's like, okay, let's pull out a retirement calculator. What am I going to be able to retire with and when? And all those numbers, while I made decent money, all those numbers just didn't sit well with me. So that led me down the path of, let's look in the real. I think it was right away. Let's look in the real estate investing, and really Bigger Pockets was, and a couple other podcasts, but Bigger Pockets was the main one that really dove into, and just kind of, caught it from there.
How did you move into storage units? Because, before you get there, if you bought a storage unit because you're buying a business, which I love, I'm a business owner. I'm an investor, but I'm really a business owner. And the business that I have in investing is all of my properties that I own. That's inventory for my business, and it's all about my business. And I love owning businesses because the value that I keep creating, if I do different things to make it worth more, then I make more money, which is great. Now, in a self-storage facility business, what would is there a way that you can give me, like, okay, this is the average profit you can make if you bought let's say 100 unit or 50 unit, whatever it might be? Is there any numbers that you can kind of, because to quantify, okay, how much money can we make and how many properties is it going to take for us to be able to replace our income? Is there any way to do that?
Not really. So I'll kind of back up a little bit. So self-storage, you should have better returns than any other real estate asset class, because you are going to have ebbs and flows and rentals, right? Not everyone needs a storage unit. Where single family houses, people need a place to live. Apartments, people need a place to live, right? So those are a little bit more predictable. Self-storage, really COVID blew storage up in a lot of positive ways. One, you had more rentals because people had more money. You had more people moving. You had more people at home. Just a bunch of factors. So you had more rentals. And then you also had investors come into the space because they saw, oh, I'm having problems evicting my office tenants or my retail tenants or my single family or multifamily tenants. And with storage, you don't have that problem. Most states within 60, 90 days, you can get them out and really no fuss. And there's other factors there too. Technology and a lot of things have changed, self-storage. But yeah, I mean, long story short, self-storage ebbs and flows in terms of demand, and you need that, especially in up times, you need that extra return, because there are low times, and we're seeing as of almost, we'll call it 10 months ago, kind of a dip in storage demand and rentals. And that's a lot of factors, but a few of them are the COVID money's, dried up. You've got people moving less because interest rates are higher. And there's just not as much. We had so much shakeup in the past 3 years that now there's kind of a lull, and occupancy rates have dropped a little bit. But yeah, to answer your question, you need better returns in self-storage compared to any other asset class.
I love the idea of having a storage facility, because if the market goes up, down, or sideways, people are going to be storing the stuff, just like a residential home. You're 100% right. Like, everybody needs a place to live. And so they absolutely need that, which is great. But at the same time, if they lose their home, sadly, if the economy changes and people start losing their jobs, they might lose their home and they have to downsize or something.
Right.
It's not easy to get rid of all your stuff. And so the easy idea is, let's get a storage unit.
Yep.
Okay. So
exactly.
Now, here's what's really interesting. If we're going to get into storage units, actually real estate investing in general, when I do any coaching, or let me even say that all of the YouTube videos that I create and the podcasts that I put out, the ones that what I know my investors, the students, need, they don't really watch those. Like, they need to know how to manage the property. They need to know how to build the business. They need to know how to make sure that it's kind of constantly making money. But they don't watch those videos. The people that aren't students yet, the ones that are just kind of like, well, how do I do it? They go right to, how do we find the properties and how do we pay for the properties?
Yep.
Those are the two most watched videos on YouTube and every podcast. And so in that perspective, let's jump in that, because they're going to be thinking about that. first one, how do we find the property? Second one, how do we pay for the properties? And then we'll get to what I really want to know is how do we make sure we're doing it right? How we make sure we're running the business, getting the right customers in, bad customers out, making cash flow, all that sort of stuff. But let's jump into, because they're going to want to know this. How do we find the properties? And then how do we fund these properties?
Yep. And it's going to be just the same as any other commercial asset class. Storage has, when I got into it in 2019, it has changed, as I talked about earlier, because of COVID. It was a little bit easier to find deals then, but even at the time, it's like with any real estate. At the time, the deals that have turned into home runs now, at the time, I'm like, I don't know if this is going to work. I may make a little bit of money, but maybe not that much. So you don't really know until even deals today. Every deal I do, I'm questioning, like, is this really a deal? But yeah, to find them, obviously you've got off market. I've found most of mine off market with direct mail letters. And for myself, I'm more quantity over quality. So I'm in Ohio. I'm in Columbus, Ohio, which is center of Ohio. I go within about an hour radius of where I live. And I look at smaller markets. So those are the markets that I'm basically looking for deals in. And I'm trying to build relationships with these sellers. I'm not trying to lowball them. And I tell them that I want to make them feel good, feel like they've got a win and that I have a win if we do a deal together. So that's kind of where, again, it's quantity over quality. I'm not sending many letters out, and I'm also following up with these owners 3 to 4 times a year. That's how I do most of my deals. But then you can drive by, just on Google Earth, right? You can look through Google Earth through a town and say, oh, that's a storage facility. Look it up, look up who the owner is and send them a letter, call them. Another way is through brokers, which is just like any other asset class, tougher to start until you've got some deals under your belt, especially some deals from a broker. It's just going to be tougher. And then there's wholesalers that there are some on Facebook, some legit, some aren't. But yeah, those are really the 3 main ways, just like any other asset class. And then you ask funding, same thing. Now I will say with storage, there's, I won't say more options. There is another valuable option that I've done a few times, and that's an SBA loan. Since storage is also considered a business, you can do an SBA loan. Right now, there's probably not many of them going on because interest rates are high, and you're probably around 9.5% to 10% for an SBA loan. So it's a little bit higher. The ones that I've done in the past, the rates were super low. I was under, I think, sub 4 interest rates. So, but they have favorable terms. You can possibly bring 10%, 15% down, sometimes zero money down for SBA loans. And that's why my first 2 deals were SBA loans, and I did 15% down with both those. Was able to get into a larger commercial asset with less money out of my pocket. So that's why I went with an SBA loan. But yeah, other than that, I will say to add, storage is still somewhat new, even though it's become popular over the past 3 or 4 years, still somewhat new to some banks. Not all banks treat storage like other asset classes. So you may have to make some calls, but yeah, your local community banks are great to deal with for self-storage.
Would you recommend somebody investing out of state? Let's say somebody lives in San Francisco and like, well, in my area all around me, it's like, it's really expensive. And I want to, man, Ohio might be good. Indiana, like places where it's going to be a little cheaper or a lot cheaper. Would you recommend doing this like remotely or setting up a team? Like, how would you be able to do that if you didn't want to be as hands-on as you are?
Yeah. And actually, as of now, I'm pretty hands-off, especially on site. In fact, I'd say half my facilities I've not been to this year. So yeah, with that said, a lot of my friends, a lot of the guys I network with that own self-storage, I'm kind of an anomaly to where I do own near where I live. Majority of my friends do not invest where they live. They have to hop on a plane to go visit their sites. So that does a couple things. That one helps you create systems and have a true business as opposed to, kind of having a hobby, which the first couple of years is kind of what I had. I was happy enough to be able to leave my 9 to 5. So if I had to go paint bollards or cut some weeds, I was happy to do that because I wasn't working a 9 to 5. I'm a different spot now. That's not what I want to do. That's not the best use of my time. But if you're buying remotely, you can't do those things, and it forces you to have a business day one. But yeah, it's storage is, you're buying a commercial asset, so it's easier to put systems in place to where you don't have to be on site. And yeah, I would say, I don't know about majority, but there are a lot of self-storage owners investing out of state from where they live.
Well, this is definitely getting to where I think everybody needs to know this systems and creating this business around your property. Because when you have property, you want to make sure that's running. Like, that's why I have master passive income. I love that when I bought one rental property, I created a business so that it ran on its own, and I hired other people to do the work. And then every single month I made money and I didn't do any work. And I thought, I've literally mastered passive income because I don't do any work. My property works for me. My property managers, contractors, they do all the work too. Okay, so I love the idea of creating a business and creating systems. If we were going to be doing this far away, let's say, a couple states away, and we need to create the business and systems, how would we go about doing that?
Yeah. So to keep it somewhat simple, you have kind of two options to where you can hire depending on the size of your facility, a complete third-party manager that handles everything. And you're more or less, you should, in my opinion, you should still have your hands on the business and see what they're doing to make sure they're doing a good job. Because they are a third-party manager, they're supposed to be doing everything. But as I'm sure other people have used property managers know, they probably won't do the things the way you may do them or as well. And sometimes that's fine, right? Most times that's probably fine and it's good enough. But there's sometimes that things sneak through the cracks where it's like, yeah, this is not good, whatever it is, customer service or the
Are there
facilities.
many of those property manager companies? Because, for single family homes, there's lots of property managers, even way more realtors, but there are property managers. Are they hard to find for your storage units?
They're harder, yeah. So it's not like I can find if I had 20 single family rentals in Columbus, Ohio, I could find property management company that's local. That's not the case with storage. There are more coming on board, and they look not all of them, but a lot of them look different. So you have the ones that are full blown, here's my property, take care of everything. And then you have on the other spectrum, you can have, and a lot of these you can hire out too. And if you want to, we can go into it. But on the other spectrum, you can hire just a call center that's answering your phone calls, renting units for you, taking payments, and then you yourself manage a local person on site that is there, depending on the size of the site, maybe an hour a month to 15, 20 hours a month, depending on the size of the site. So that's kind of the two spectrums on how to manage remotely. I'm somewhere in between where I don't really like calling them a call center. They are a hybrid management company, in my opinion. They answer calls, rent units, collect money. And then they also communicate. We communicate with them through an app, but they communicate to my local helpers at each site. So they are, in a way, I wouldn't call it managing, but at least delegating and following up with my local helpers with simple tasks like clean out a unit, someone just moved out, get it rent ready. So I'm somewhere in between there. And then I also have an operations manager and a district manager that takes care of, that watches everything, takes care of contractors, vendors, and anything else that may pop up. So yeah, there's a kind of a wide range there. And there are more companies coming on board. 3 years ago, you didn't have these kind of options. As storage has become more, I guess, known as a true investment in the investor space, more true property management companies are coming on board, and we have better options.
That's great. Okay, so let's say we did figure out a way to manage a property well, whether it be a hybrid, whether we have a call center or whatever it might be. It could be the owner operator where you're doing it yourself. We're managing it now. let's say that now, how do we make sure we find the right customers? How do we make sure we price it right? I mean, there's so many like just business questions from the
Yeah.
customers, pricing, making sure that with seasonality, all these, but you probably have a lot more understanding of what goes into the systems and making sure the business is running well.
Yeah. Well, and with storage becoming more popular, they have software now to where you really don't have to do much as far as rates. The AI software figures it out for you. But so going in day one, we'll start there. Going in day one when I take over facility, I'm looking at the market rates in the market. So I'm looking at who's highest, I'm looking at who's lowest, and I'm trying to find their occupancy rate as well. If someone's super high, but maybe they've got a special that's running, I don't know, 6 months half off or 6 months $1, whatever it is, they're ramping up and they have high occupancy, right? So I'm trying to look at all those little nuances in there too. But I'm looking to be not the highest day one. And these are for existing renters. I'm looking to be kind of like a B plus range, right? To where if someone gets upset because I'm raising rates day one, they don't have many options other than go to like I don't want to call it dump facility, but a facility that's not as managed as well as mine. That's going to be their only option. And more than likely, those facilities are 100% full, so they can't go there. So their only options are the B plus up to move to. And at that point, they're going to be paying more. So that's kind of where I start. That's existing renters. And then, and I'm going through this right now because I'm getting ready to close on 2 facilities. And then after that, it's all about occupancy. I'm not as concerned with competitors in the market going forward. After I take over, I'm looking at my occupancy and it's per size. So if I have, it's like the airlines, if I have 2 10x5 units left, my rates are going up. And the software that I use, I can put these numbers in there, but I do track this at least weekly, if not a couple times a week. I'll go in and check to see who's moved out, who's moved in, where numbers are, what we need to do to change them. So yeah, it's based on it's called yield management, just like what the airlines and what hotels do. And I'm really not, my competition is myself. And it's how we base rates off is, yeah, how much availability we have.
How do you find customers then? I mean, is it a lot of marketing? You have to put out flyers. What do you do?
Yeah. So I'm in smaller markets, towns from, we'll call it 10,000 to about 70,000 within like 3 to 5 mile radius. And sometimes we run Facebook ads. Sometimes we run Google ads, sometimes Sparefoot. We make sure that our website is listed, if not at least on page 1, at minimum page 1, if not top 1, 2, or 3 results. For the most part, those right there take care of move-ins. And then every once in a while, we'll put certain properties. I'll put just yard signs in if we have a special going on. Sometimes we'll collect a renter or 2 from that. But yeah, it's kind of, location is less important now than it was 5-10 years ago for a storage facility. So most of mine, maybe I don't say all of them, but most of mine are not on busy roads, main drags. They're kind of a road off or, behind an industrial complex where you're looking on Google to see where it's located. So that's how they're finding us.
So what would you say would be the highlights and the lowlights of running a storage facility? Because I could say single family homes, I mean, you could have a tenant trash the place, and then that's a pretty big low light, or if you buy a house that it needed to be rewired for electrical, those are low. But the high points are, man, you can make a good amount of money, you can scale the business, you can use other people's money. So what would you say are the highlights and the lowlights of storage facilities?
Yeah. I'll start with the lowlights. So, and I'll tell you a story to kind of encompass everything. So my very first facility, 2019, closed in June, and we were going on a family vacation to Florida. I think it was like 10 days, 14 days after I closed. Fortunately, I had my local helper already hired. But while we were gone, literally, as soon as we got to Florida, I got a phone call from my local helper. He calls me and says, "Hey, we've got someone on site. Looks like they're living on site. They have a dog. They're also screaming at each other." When he showed up, he is then like, this is all like on the phone talking to me. He's like, I found a few locks on the ground. Looks like people have broken in. There's needles from drug paraphernalia on the ground. So I literally had like run the gamut. My very first month of ownership, and I wasn't in the state, so I had to count on the little systems I had in place, which was him, on how to try to figure that out. So that was not fun. And since we've had people living in our units, but now we have systems in place to where it's like, okay, here's step one, do this first. Then it's step two, do that. So you come up with systems and procedures to take care of that stuff. And that's kind of the highlight is storage is, especially when you scale, you're able to create systems and processes to take care of anything. And then I'm fortunate enough to be in a position where I can hire most of that stuff out and I don't have to worry about any of the low lights and really the people that I've hired, and they're awesome, but really the first times going through finding someone living on site isn't fun, right? You just, it's heartbreaking. But after you're through it a few times, it's like, I know the steps, these are the steps, and they're going to find somewhere else to go lay down at, I guess. So yeah, I mean, I love storage. Again, it's, to me, it's a business and it's real estate. So I get the best of both worlds.
How many facilities do you have now, or is it units? Do you call, like, how many units do you have now?
People talk, yeah, for the most part, people talk square footage when it comes to storage facilities, but I've got 13, including the two that I'm getting ready to close on, which is about 300,000 square feet, just a little bit over, outdoor parking. And yeah, and some of them, actually, I've got one town where I will soon have 5 properties in one town, which I think is pretty cool because I'm buying up market share. And that town is actually the one where I have the hardest time finding renters because it's getting to be saturated. And actually U-Haul is coming into that town as well. So to me, it's, well, I could either run away from it or I could keep buying more market share and go and fight the big boys and hopefully win, or at least come out favorable.
That's fun. So 13 total facilities, and
Yep.
that's a lot of square footage. That's fantastic. And how do you continue to scale? Do you partner with people? Do you have other investors that come in with you? Is it all like just you and your wife and you guys own it? How do you guys continue to scale that?
Yeah, it's just me. My wife is here for the ride, but it's just me doing it. She's here for support. But yeah, it's just me. I've not taken on, I guess I've done, my dad lent me some private money one time and I paid him back in, I don't know, 6 months or a year. But other than that, yeah, it's my own money and I've done it a bunch of ways. And I mean, I'll be honest, my first few properties, I did use cash that we've saved up, tapped into HELOC. And then at one point, actually, this was right after COVID, and I got some kind of COVID relief from it. Cashed out our 401ks. What else? Sold all 4 single family rentals. And then I've done some cash out refis to kind of keep loading the chambers. Cause yeah, at one point it's like, I've wasted all my bullets. I'm either going to have to find, private money or money partners. And I have not done that yet. And there's obviously, you can scale much faster doing that. I just haven't done that. I've done anything by myself. And so far it's been, to me, it helps me sleep at night. I do have partners, I guess technically the banks are partners, but I've done everything with my own money and then recycled through equity of the properties and using that money.
That's super encouraging. Now with commercial loans, because I mean, these things are coming to my head as I'm thinking about it, because the reason why I don't like investing into multifamily is the 5-year, usually you have to, after 5 years, refinance the property because it's a commercial loan. And I was like, man, I just love the 30-year fixed. Conventional loans, once that's paid off, it's paid off. And I just get tired of having those loans, having to refinance it because it costs a lot of money to refinance. And a lot of companies that do multifamily, they want to sell the property to somebody that wants to pay higher and hopefully make some money on the, on the sale as well. So it's, I guess I'm assuming it's the same similar type of setup. So are you planning on refinancing? Are you planning to sell those? Or how do you look with at your properties with these commercial loans and the fact that they come either due or basically have to refinance every 5 years?
Yeah. So mine, I shoot for 10 years. The ones I'm getting are they were non-recourse. Things have changed in lending environment really this year. But now I think there's a threshold. It's either 3 or 5 million, to where if you're under that for a loan amount, it's not non-recourse. So the deals that I've done this year are recourse. But yeah, I'm getting 10-year terms, 25, actually getting a 30-year amortization for a storage property, which is reason they're doing that is because interest rates have gone up so much. But yeah, 25-year am for the most part, 10-year note. It's usually, so if I'm doing that, I'm following 10-year treasury. And I'm getting a spread above the 10-year treasury is my interest rate, which for the most part might have been pretty low. But yeah, I shoot for 10 years if I can. I don't like going.
So you would refinance it after the 10 years?
Yep. Or yeah.
So you plan on holding onto these?
I plan on holding them as of right now. Yeah, I've tried selling a few in the past. Right now, and I told the broker, and he's a good friend of mine. I'm not a good seller. I'm an investor, so it's going to take someone to really say, here's your lottery ticket. Basically, we're going to overpay and give you a number that you didn't even think was unmanageable.
Oh,
with
totally.
the lending market right now, that's not possible. So
totally. And once I own something that makes me money, it's like, why would I sell it? I could literally give it to my kids in the future. Like it's just making me money. Now, if it's a bad asset and then no longer an asset becomes a liability, then I look at it. But yeah, it's really hard for me to sell when I'm making money on it. Now with that, you're going to be coming to the Real Estate Wealth Builders Conference, where you're going to be sharing on the self-storage, teaching even more in depth. I love that. But also people are going to want to, so everybody, if you come to Real Estate Wealth Builders Conference next year, it's going to be in March 2024, and it'll be in St. Louis. So you definitely got to come hang out with us. Get your tickets. It's the promo code's going to be podcast. So check the link in the description. If you use the promo code podcast, you get 10% off your ticket. Come hang out with all of us great investors like John and myself, trying to help people how to invest. But with that, John, I know people before then are going to want to start talking to you, possibly working with you, or seeing how to invest in real estate. How can people find you? How can they maybe possibly reach out to you online?
Yeah, they can find me at L4investing.com. That's just the letter L and the number 4 investing.com. That's really for me to find leads, but myself and a friend of mine we are growing a community right now that we're trying to do storage training. We've done technically 2 classes now and soon to be 4 events. So we want to help out. We want to give back. We've seen how much not only real estate investing, but specifically self-storage has changed our lives. And we want to share that information and talk self-storage, business development, a little bit of personal development. And L4investing.com is the best way to reach out to me.
And everybody, he also has a podcast, the Do More podcast. It's definitely something you should check out as well. But John, thank you so much for being on the show. I really appreciate you, man.
I appreciate you having me on and excited for March.